Dalal Street clocks huge gains this week with the broader market seeing a big buying. The Nifty and the Sensex are up 4% this week. The midcap index has recorded its biggest weekly gain in the last 2 months. Hello and welcome to the Editors Roundtable. Today on the show, we take you through all the market action of the week, take stock of all the big block deals that have started taking place again in the last 2 odd weeks. And we will also put the spotlight on mutual funds and whether they have enough firepower to keep buying in this market. I'm Surbhi Upadhyay. With me on the show, of course, Nimesh and Nigel. And also joining us today in the studios right here with us is Gautam Chachoria, Head of Global Markets, UBS Securities. Gentlemen, great to have all of you in. And Gautam, thank you so much for being here in person. I can tell you personally, for me, this doesn't feel like a 5-day week. It feels like, 2 weeks have ended, given the volume of information and news flow, guys.
Yeah, news flow. I mean, markets have also been so surprising, like how we get surprised every day with the Trump tweet, right? I mean, every day is a shocking tweet from him. And I think markets have also shocked a lot of investors. They're sitting on cash, a lot of HNIs are out of the market, and boom, the indexes are 4%, mid-cap indexes rallied pretty hard. All the stocks, the defense stocks are up 15, 20, 25% in just 4-5 days.
Yeah.
That second of market we've seen in the last 1 week. So it's been crazy, as you rightly pointed out, doesn't feel like it's a 5-day week. I mean, it's been like...
It feels like we've been working for 2 weeks.
Absolutely.
Because the news flow is so intense. It's actually quite astounding, right? Who would have thought that you have the whole trade war issue, this Liberation Day disruption. Then from a trade war, you've moved to a real geopolitical war.
Yeah.
And in that scenario, in those 4-5 weeks, this market will rocket 15%.
Well, that's right. And Trump, Nimesh, one tweet a day is okay. Sometimes it's different in the morning, different in the evening. It depends on which side he's waking up as well. And the other point is, as you said, this rally has been so swift. A lot of money sitting at the sidelines, just waiting for that dip, which eventually hasn't yet come. So they'll have to rush in maybe at some point.
It looks like, I think you're going to put out a piece on the amount of mutual fund cash people are sitting on. But even generally, I talk to so many large investors, and everybody seems to have left out. I mean, there is a lot of left out feeling now. Gautam, you must be talking to a lot of clients as well. Generally, is that the sense that, everybody got just caught by surprise and there is a lot of left out feeling now?
If any sharp move, no one can participate, especially when you have moves early in the morning also. It's very difficult, right, for them. And this left out is both global and local.
And the thing is that, and that's the hardest thing, right, in the market, that to buy when the news flow is still negative. Because everybody thought there will be another dip and there'll be another leg down and then we can buy, we'll get better prices. But it just... Throughout all the negative news, the market just kept rallying. So what's happening?
And you all know, right? Nigel, we used to talk to a lot of experts on the channel as well. At 22,000, everybody had come out and said, next is 19,500 and maybe 19,000 on the Nifty.
We did say market is bottoming out.
But I remember, Gautam, at that time also you were a little bullish. Even from the sidelines of the conference and all, you said, we feel it's good level to enter at 22,000. Still hold on to that view that 22,000 is a kind of near-term bottom for the Indian equities?
After the long week, everything is falling in place. Narrative is good, flows are good, sentiment is positive. Even Trump, the tweet world is positive for now. But the risk-reward at these levels is obviously not attractive as at 22,000.
Correct.
So our Nifty target is 26,000.
Sure.
So there is still some momentum left. I think it should retest the earlier lows, earlier highs.
Sure.
But risk-reward is no longer feeling as attractive. So do we recommend investors jump in at this level in a big way? No.
Well, Gautam, don't say recent lows. We went to 21,900, then everyone said we missed that, and then we visited 21,700. So hopefully that's the near-term base in place. But I wanted to ask you, we're at Nifty's at 25,000. Everyone's thumping the table. This is the highest since October 15th. But a lot of small cap stocks, the small cap index itself is still 12-13% away from the same day, that's October 15th. If you look at even the Nifty Next 50, that as well is more than 10% down. Do you think from here on, the headline index could take a bit of a backseat and maybe the broader markets outperform, or would you stick to the large cap names?
We are still sticking to the large cap names at a very broad market level. For the small cap world or even the mid cap is okay. Small cap world specifically, what we saw in last year, I think that the requisite conditions are still not there. Right? There's not enough euphoria. There's optimism, but not enough euphoria for it to be driven high. And again, the other thing to keep in mind, this is only last year. A lot of retail investors, even the small cap funds, etc., the memory is fresh that the drawdowns or losses can be sharp. So for that to go back very quickly at an euphoric level, I think will take some time. So large caps will still be fine.
Let's talk about the block action.
Well, Now we'll focus more on numbers. So I'll talk about some large blocks which have happened and which have taken place, and we'll ask you about your views as well. So last 10 days or maybe 12 days, there has been block deals worth 17,000 crores. So nearly $2 billion is what we've already seen. The promoters are PE encashing in this pullback. So to start with, today itself we saw a large block in Bharti Airtel. Singtel sold a little over 1% stake for 13,000 crores. So that was a large block which happened today itself on Friday. Even JSW, there was a large block where the promoter entered it through the trust. They sold 2% stake and they raised close to 1,200 crores. The other big notable deal was Paytm, where Ant Financial sold 4% stake. They own 10%, they've sold 4%. So still some left, but that again was a very large block deal. The other large interesting deal was K Fintech. They came out with solid set of numbers, but then General Atlantic came and sold 10% stake in one single day, and they've rose close to 1,700 crores there as well. So quite a bit of large deals which have already happened. But when I talk to some large funds or for that matter the investment bankers, it seems like the pipeline is quite strong for the next 2-3 weeks. As in when the earnings season gets over and there is an opening the window, there's going to be large blocks. I'll just run through a few names which I have heard of where there could be large potential deals. To start with, Asian Paints, the strategic investor is likely to sell a large stake. Then it's going to be a large block as well. Some of the names where private equity will keep selling stake. Zomato is one, Swiggy is the other name. Keynes Technologies yesterday reported very strong set of numbers, but again, there the expectation is that it could be a decent sized block. Aptus Wealth, again, a private equity sitting there. They're going to sell one-fifth of their stake. Ami Organics, OneSource, and Apollo Tyres also could be an interesting name there. Again, came out with decent set of numbers. The commentary was strong, but again, there is a private equity who owns 10%, and there is a strong buzz that they'll sell half of their stake as well. So again, that's going to be quite a sizable number that's going to come out. Apart from the block deals, Surbhi, the other interesting kind of observation has been the kind of MNCs which are looking to exit or sell out their stakes. This week, like Thursday, Friday, we had a large OFS. In terms of size, it's a large one. Wendt is looking to sell its entire 37.5% stake in the Indian company. So that's while in size it was only 500 crores, but they're selling their entire 37.5% stake. So that's one big exit. Next week, by 20th, there is Whirlpool's board meet for results. And we all know that the parent has gone on record saying that they're looking to sell 30% of their stake in India. So the MNC is selling out, P is selling out, promoters looking to exit in some form. So looks like, now that we are fag into the earnings season, this is only going to pick up and there's going to be more momentum in terms of large blocks and large supply. So Gautam, how do you read? Traditionally we've seen a supply of paper means it's negative for the stock, but that's all out of the window in the last 2 years, right? We've always seen stocks actually going up after large blocks. So what's your take?
So I don't think the first line I would agree with, that traditionally supply means necessarily markets come down. Okay. It's in the context of markets.
No, I'm saying generally,
the stock would fall. On the day of a block trade, the stock would fall, but now it gets, it reverses.
See, what I meant was that when the insiders sell, a PE selling or a promoter selling, generally it's been perceived as negative and they would know better than anybody else, right? Yeah. So from that perspective, in the last 2 years, that's not been the trend. So
that reflects the level of cash sitting around.
Correct.
Very simply. There's enough.
Too much of liquidity chasing limited.
And then cash levels, like locally with the funds, even appetite in general, beyond the institutional funds, also the appetite with the retail, high HNIs, the cash levels are just too high. So that's the reason, very simple reason. And also the backdrop of sentiment, right? The market sentiment today versus a month back is very, very different. So I think this was pent-up supply. We had almost a quarter where we didn't do much, unlike last couple of years. So this is going to, I think, if market remains where they are, this will continue.
But Gautam, isn't it going to be a bit of an overhang? Because I know the argument is that our markets have deepened and now we can absorb all this block supply. But the scenario versus, there's one difference that I want to talk about, and Nigel will speak more about this. In October, around November, December, mutual funds were getting in 40,000 crores, 42,000 crores of just equity inflows every month. Now that number is halved. Now they're getting 25,000 crores on a net basis. Yes, the SIP book is strong, but that net number has halved. So in the previous block cycle, when the markets peaked out, domestic institutions and mutual funds were big buyers. Yeah. Do you think that will hold true right now? Or is this the fact that insiders are selling, whether it's promoters or PEs, it's also an indication, right? Market's back at 25,000. So isn't it indicating that this is a near-term top?
So I think for the foreseeable future, not necessarily. I think markets can absorb, also given the very high cash levels, not just the inflows happening.
Sure.
So I think there is enough room for it to absorb. And even if you put these numbers, whether you look at IPOs or blocks or QIPs, in dollar billions or rupees crore, they seem very, very high. But it's not necessarily off the charts if you go back to, say, pre-GFC as a percentage of market cap, etc.
Yeah.
So there is precedent for these numbers to actually even go higher. And there's enough cash levels today. So I won't worry about that for now. Okay. We were worried about it a bit towards the end of last year when it was reaching that level. We are far from that.
Okay, all right. Gautam, I wanted to ask you, if the markets are in a better place, then how do you play these financialization stock market plays? BSE people said that it was expensive at 5,000. It went to 7,000. Angel Run saw a sharp correction. I think in the recent low, 2,000 has become 2,800 rupees, just to state a few examples. How would you play this? Would you play the wealth management listed companies? Would you play the brokers? Would you play the stock exchanges? Both MCX and BSE have done very, very well. Your take.
So by the way, before he speaks, they've already played, in India by buying 5% in 361. So UBS actually is now 5% holder in 361.
Yeah, so I name the others. Yeah, go ahead.
I can't comment on that.
Obviously. That's a separate.
But like, our research team is broadly positive on the financialization as a thematic. And one of the things we pick up from investors globally, not just investors here, is India is one of the unique capital markets and much more similar to US, for example, this financialization theme. Like investing, saving, capital markets, it's much more similar to that market. So in that context, what we are seeing at a sector level is not surprising. And there's still a long runway left for them to keep on growing.
Sure. Okay, I think we have to take a quick break. We have to discuss a lot of other sectors and your whole strategy for this market now. Take a break and come right back.